Hi, everybody. I'm Leslie with the New Mexico Small Business Development Center. We have a lot of attendees streaming in today. I want to tell everyone this is a big topic. We have a lot of information to present on Restaurant Revitalization Grant Fund. Please type your questions into the Q&A. We will get to all the questions just as quickly as possible at the end of the presentation. Today, we have Mr. Larry Donahue, a seasoned business professional and attorney here in New Mexico. He will be presenting the first half of the webinar. The second half of the webinar, we will also have Mr. Glenn Walters, who is the Senior Special Projects Coordinator for the New Mexico Small Business Development Center. Again, please type your questions into the Q&A. Larry?
Thank you. I appreciate the introduction, and hello, everyone. We are going to move pretty quickly, and I want to apologize ahead of time because we got a lot of ground to cover, and it's not fully fleshed out and defined yet. So what we're going to do is kind of take two steps to this. One is I'm going to talk about the Act and some of the big issues relating to this grant and the funding, and then I'm going to switch it over to Glenn, who's going to dive down and drill down to more nuanced issues relating to what the SBA has decided and maybe fill in some of the gaps that I will have maybe created. And then we're going to leave quite a bit of time at the end of this. We're shooting for about 20 minutes or so for questions. So you're probably going to have some questions when I dive in. You're going to have questions with Glenn, and that's okay. Get them ready, and we'll do our best to answer them at the end of the presentation because we do have a lot to cover. The other thing I want to mention is you can have a copy of our presentations by contacting the SBDC. Before I begin, let me do a couple of quick formalities. I want to tell you about some of the resources you see here for COVID-related issues that the SBDC makes available. Again, you will have access to this presentation and the links when you contact the SBDC for a copy of the presentation. I want to remind you to mute your audio if you haven't. And also, we're going to have a lot of words on the screen, and we find that it looks best if your Zoom ratio is to fit window. You can also put questions in the Q&A, although we're going to probably answer most of those at the end, as I had mentioned. Finally, here's the quick overview. We're going to talk about the Restaurant Revitalization Fund grant. I'm going to give you some general information. We're going to answer some questions and some issues, and then I'm going to switch it over to Glenn, who's then going to talk about some of the, fill in some of the gaps and raise some of the newer issues that have come out of the SBA regarding this grant. Finally, let me remind you that the SBDC has some great information out there. You should go to their website and then look at the webinars link in the upper right. And there's a lot of great stuff. There's replays from earlier webinars, and then there's some new stuff coming up as you see here. So let's talk about Restaurant Revitalization Fund grant. And I'm going to talk about some of the fine print in the Act, and we're going to talk about the application. That is such that it is. It's everything subject to change. And I want you to understand the disclaimer here. I am a lawyer, but I'm not your lawyer. The SBDC is not a law firm, so we really can't convey legal advice here. Furthermore, everything that we're telling you is subject to change or better interpretation from the SBA. So there's going to be a lot more guidance, a lot more detail coming from the SBA that just isn't yet out there. So everything that we're going to tell you, just be ready to understand that things might change a little bit. So what is the Restaurant Revitalization Fund grant? Well, did you hear in the news about that $28.6 billion fund? That's what this is. But it's really part of the bigger stimulus package that was recently signed by President Biden on March 11th, the $1.9 trillion economic stimulus bill. And so what we have is what's called the American Rescue Plan Act of 2020. And it is a very, very large bill and act, putting money all over the place. And the Restaurant Revitalization Fund grant is literally 3 pages in this outrageously large act. But this act does a lot of other things you may have heard about, direct payments to individuals. It's also doing one thing that I think is really causing a lot of problems for restaurants, and that is extending the unemployment benefits. We're not going to talk about that today, I'm sorry, but happy to wax on about it at a later date. Call me. But I do want you to understand something. We're going to be talking about gross receipts. And you need to understand, we are not talking about New Mexico gross receipts tax. When we mention gross receipts, we're talking about gross revenues, total income, not GRT. Okay, so I'm not going to mention that again. Just try and remember that as we move forward. So, what is the grant? Well, it's a tax-free money to you, not a loan, for certain types of qualifying entities. Depends on when did you open the restaurant. If you opened prior to 2019, the grant money available is your 2019 gross receipts minus your 2020 gross receipts, and then minus the totality of any PPP funds you've received. Did you open in 2019? Well, it's a similar formula, but you don't have all of 2019 to calculate gross receipts. So what you do is you figure out the average monthly and then multiply by 12. And you do the same thing for 2020. And again, it's the 2019 average times 12 minus the 2020 average times 12. And then you do subtract out the PPP funds you might have received. Finally, did you open in 2020? God bless you. That was a really rough year to open up a restaurant. But if you did open it up, you still qualify for funding. And what you do is you take the eligible expenses incurred during the covered period, and we'll talk about what that is. You subtract out the gross receipts during the same covered period, and then you, of course, subtract out PPP funding. And it's within a range here. There's a minimum that's defined by the SBA. Glenn's going to talk about it in a few minutes. And the max is a total of 10 million or 5 million per location if you have more than one location. So the other thing you need to understand about this is there's a 21-day priority that is listed here. And what that means is once the SBA gets this all figured out and the application gets finalized, they start accepting applications. For the first 21 days, they're going to focus on women-owned, veteran-owned, and then socially and economically disadvantaged business concerns. And Glenn's going to talk more about that, but I have some lists here. And Indian tribes are considered a disadvantaged community, or some of them are. And then we do have certain disadvantaged groups that these groups aren't in the act, but we are expecting the SBA to address and talk about those. And Glenn will bring it up or mention this further. After the 21 days passes, then it's going to open up to the rest of the businesses and the rest of the business community. So I bet you have lots of questions at this point, and we're going to address these. You know, what businesses qualify and what don't? What can the funds be used for? And I'm going to talk more about gross receipts in the covered period. And then if you're like me, I had questions about the PPP funds. For instance, you have, of the PPP funds, what can be forgiven versus what is an ongoing loan? Is there a difference there? And the answer is no, but I'll talk a little bit more about that quickly. So what businesses qualify? So the issue here is public assembly serving food and drink. And, you know, think restaurants, food stands, you know, the stuff I have listed here, but there's other organizations out there, right? Where you might be selling product as well as serving food or, you know, liquor or drink. And this threshold, there's a 33% threshold, and that is really going to be defined and identified by the SBA. It is not in the act. But what seems to be clear to me is the act is not trying to permit grocery stores, for example, to take advantage of this. I don't think. They're really trying to go after those businesses that are predominantly, or a significant component of the revenue is serving food on site or to individuals or people. So that is going to be in flux. And I think there's going to be a lot of discussion around that because I think we have a lot of businesses that kind of do a little bit of both. It's important to understand what's excluded here. And one is a state and local government owned or operated businesses. But here's what you need to understand, and this is important for franchises, for example. the question is, are there 20 or more locations and affiliated businesses? And if there are, you don't qualify. So if you have, corporate owned franchises, they're not going to apply here and they're not going to qualify for the grant money. But if you are a franchisee and you own the franchise and obtain a significant portion of the business of the profits, then you would qualify. There's other potential problems here. If you permanently close your business, you're not going to qualify for the grant. If you're not primarily located in the US, or you filed for bankruptcy and you don't have an approved plan of reorganization, that you're not going to qualify. If you've done a other type of bankruptcy other than a reorg, you're not going to qualify. What you need to understand about affiliate businesses, this is defined in the Act. They are an eligible entity, meaning another restaurant or restaurant-related business that has a controlling or ownership interest of 50% or more in the business. So if you are partially owned by a franchisor and they cross the 50% threshold, you're not going to apply. If it's less than that, you can apply, and this will work out for you. So, do franchises qualify? Well, under the Act, if the affiliated business is 50% or more ownership of the local business, then no. Otherwise, yes. And you may need to talk to a lawyer or a CPA to better understand what some of the issues are if you think you're on an edge case or you have questions about it. What can the funds be used for? They can only be used for business-related funds that I have listed here. And that includes the payroll costs, their payment on mortgages, including the principal. However, prepayment. So if you're overpaying, the overpayments are not going to qualify. The same thing with the rent payments. If you overpay on rent payments, that's not going to qualify either. But what is really interesting is the maintenance that I've listed here. And that can include TI, tenant improvements, for instance. So if you are going to build out to do accommodation for outdoor seating, that will apply. And interestingly enough, the Act says what I have here in quotes: walls, floors, deck services, furniture, fixtures, and equipment. That seems pretty darn broad. It seems like it's giving you an opportunity here to possibly, put in that new floor if you needed it, or to expand or improve your equipment if necessary. What you do need to understand, though, is if you use any of the funds for anything that's not in this list, or you don't spend it within the covered period, it has to be returned. So how are gross receipts calculated? The quick answer here is talk to a CFO or CPA or a good accountant about this. The quick answer is it's total income, gross income from any and all sources, and you do not take out your expenses. It's the total revenue to your business. And I said here, it's going to be your total income and cost of goods sold that you're going to see on your tax forms. That's what gross receipts means. What is the covered period? Right now, it's defined as February 15th, 2020 to the end of this year. But Congress has given the SBA the ability and authority to extend that up to 2 years. I don't believe they have yet, but Glenn's going to discuss some of that here in a few minutes. But if you don't use the funds within that covered period, remember what I said, you're going to have to return those funds. So you want to use those funds. So how does the PPP factor into all of this? The answer is not well. If you've received any PPP funds, the total funds for draw 1 and draw 2 gets subtracted out from the grant money that you can be given. So does it matter if you have some of it forgiven and some of it you have to pay back? No. It's the total amount of the PPP funds that you were given that you have to subtract from what you're available or what's available to you. What's worse is if you have a pending application or you've received money for the Shuttered Venues Operations Grant, it makes you ineligible for this completely. So if you've submit an application, then you want to focus on the Shuttered Venues Operation Grant because this is not going to be available to you. Other grants, loans, the EDL, for instance, the emergency grant money, if it was provided by the state or the SBA, that's not a factor here at all. Doesn't matter at all. It could be considered an operational expense, at least the interest, but that's something we're going to wait for the SBA on guidelines as well. Is the principal payment of these grants or loan, not the grants, the loans, is that something that can be considered an operational expense? I don't think we have guidance on that yet, but Glenn might say otherwise here in a few minutes. So how do you prepare for the application? And I got to tell you, if I had a nickel for everybody that wanted to hire my firm to help them with the PPP application, I'd be a rich man indeed. And it doesn't make sense to hire an expensive lawyer to do that. You needed to be working with your CPA and your banker. Now, with this application, it's different. You are not going to be working with your bank. You are not going to be submitting an application to the bank. So don't talk to your bank about this because your bank's probably not going to know. Your best resource for this is probably going to be the SBDC, any representatives you have with the SBA, and other folks that are focused on helping you with this. The best resources I've seen actually have been the restaurant associations. The local and the national restaurant associations have been great. But at any rate, what you want to do is get your documentation in order to prove gross receipts. And remember what I said, if you opened up prior to 2019, it's going to be all gross receipts for the year 2019 and the year 2020. And if you opened in 2019, you do need the gross receipts for what you did in 2019 and 2020. And then finally, if you opened in 2020, God bless you, it is the gross receipts and eligible expenses. And you're going to have to approve all of that in order to go forward with the application. The other thing you need to make sure you get prepared is your relevant tax documents, the IRS forms 4506-T, relevant tax returns, bank statements, your point of sale reports, if you have those, are going to be helpful, including the 1099-Ks from your merchant account processors. Get all of that ready and available. If you have a CPA or accountant, get your financials in order. Just get that stuff prepared because when you get the application in, you want all that information ready and available. Otherwise, I don't want to say they're going to pass you over, but what I've seen with the PPP is they're like, give us the information, and underwriting looks at it. And if you're not able to give it to them when they ask for it, then they go on to the next application and they'll get back to you eventually. But I've seen weeks and months go by for people. So don't let that happen to you. And then, of course, please monitor the SBA, talk to the SBDC, and your local restaurant association and the National Restaurant Association really seem to be on top of this right now. And so with that, I'm going to now turn it over to Glenn. I'm going to stop sharing and hopefully you are ready.
Okay, Glenn's gonna start his screen sharing and his presentation.
It always helps to unmute and to find the unmute button. Hopefully folks can all hear me.
Yes,
Sound
we can
good.
hear you.
I'm going to continue on. Hey, Larry, great job, Larry, presenting, what was in the American Rescue Act plan. That was a very good presentation. I'm going to just hit a couple of highlights. I'm going to repeat just a couple of quick things, but I'm also going to say, what has the SBA done since then, or kind of hinted towards, kind of like, the old Paul Harvey of what's the rest of the story kind of deal. So I'm going to give you a few insights there. I'll also show you what the draft application is going to look like. And I'll show you where you can view that as well. But again, everything that that Larry is talked about in terms of, things could be subject to change, etc. Obviously, if it's in the actual legislation that was passed, if it was in the American Rescue Plan Act, then it's going to be pretty solid. But there are a lot of rules or regulations that were left up to the SBA to decide. So again, as Larry already said, thank you all for joining today. I'll just remind again about how much could an entity get. But there's another thing that was added, and that's the minimum grant amount is $1,000. So that is the minimum. That's a new thing that the SBA has come out with. So let's see now. Okay. Unlike some of the things you might have seen in the past with other grant applications, there is no requirement to register through SAMS.gov or to get a DUNS number, like in the shuttered venue operators grant or any of that stuff. Those will not be required. This is the website that they're expecting to use. Don't try to go to it now because it's not live, but restaurants at sba.gov is supposedly at least talked about as being probably the portal. But we expect information to be coming out more about that in the near future. They will be using point of sale vendor platforms interfaced with the SBA system. Well, what does that mean? Well, a lot of restaurants use point of sale vendors on a lot of different transactions and things. So the SBA is going to try to use those as much as possible so that those are systems that a restaurateur is already familiar with. You would probably have lots of questions on that, but let's wait for the guidance to come out with SBA of how all that works and how the platforms work, etc. They've also said they're going to allow telephonic applications, which is a different thing. And they said there will be a call center for assistance. Now, I assume that's going to be prior to application and not application because it is a grant program. So this is, I'm basically saying with the guidance I got that the landing page for this, a guide, is likely to be available by next Monday. Now, don't hold me to that. I'm just telling you the kind of information I get. It might come out on Friday. It might come out next Monday, but fairly soon you're going to see the guide, the information. So stay tuned to our website, the SBDC, stay tuned to the SBA website or the restaurant associations or whatever. But we're expecting something as far as a guide, as far as some of this information within a week, let's just say. But again, everything's subject to change because of timeliness. But that's the inside information that I have, at least for the moment. So, Larry already talked about the priority periods. What they're probably going to do is have a pilot period for the first week just to see how things are going. So they may cap it at a certain number and then take a little pause, etc. Let's say a day 2 or 3, if they get so many applications so they can see if there's any bugs. So expect that it doesn't change anything about the priority period, but they may do something called a pilot period inside the 21-day period. And all that means is that they'll only take so many applications and then it'll stop for a little while or whatever. Don't worry about any of that. It'll all be explained later. I don't have any more information about that. And also expect some of the total 26.6 billion to be set aside based on amounts. What we've heard is something like probably the $5 billion will be for businesses with less than 500 million in 2019 annual revenues. Again, not a big deal, but there should be some set asides in this for, based on the amount of annual revenue. Let's see here. So this was also mentioned by Larry, this idea that obviously it ends December 31st as far as expending your dollars, but the SBA was given the authority by Congress to extend this up to 2 years. And based on other things that have been happening, if you're familiar with PPPs, etc., where Congress had to go back and extend the dates and all of that kind of stuff, Congress decided on this time to go ahead and just give the SBA the authority that they could extend it so they wouldn't have to do this. the initial indications is they're going to take up the offer that Congress gave them, and they'll extend the period all the way to March 11th, 2023 to expend the dollars. You'll see that in the draft application as well. They also are saying that they expect, as an estimate, it will take 45 minutes to complete the application. This is designed with a lot of input from trade associations, restaurateurs, restaurant associations, and others involved in this to kind of streamline this, make it simple, make it as easy as possible to get through this, and to get the much needed funds that people are seeking. So we'll see how that plays out in reality, but that is the hope and the ideas and the thoughts behind it. Um, as Larry mentioned, this idea of the 33%, whatever, as far as what's going to be required for on-site sales. And remember what Larry was saying, it's very important. The primary reason that folks are going to the establishment is for food and to be served food and drink. If that's not the primary purpose, it's a non-qualifying event. But as far as the 33%, the SBA is only indicated that not everybody follows that or has that requirement. It's just these. So another, a normal restaurant doesn't have that, but a bakery, a brewery, a microbrewery, you can see the other things there, a winery or distillery, those will be required. That 33% of the gross receipts has to be online sales to the public of consumption of those products. And for an inn, it has to have at least a 33% of on-site sale of food and beverages. So again, the 33% currently only applies to these entities, not to everyone on the earlier list. Larry already touched this. I wasn't sure if he was going to cover that, but I think it's always good to remember or to remind folks of this. If you currently have a PPP loan that you haven't heard back, it's a new loan, you've got it, and you submit a Restaurant Revitalization Fund grant application, if that's approved, it automatically disapproves the PPP loan that's currently, they'll just reject it because you can't get both under this scenario. In other words, you can get a PPP earlier and you subtract it, but you can't get a PPP after the restaurant revitalization. So let's go on the next slide. So you've heard this term of the 3 priority periods, you know, the women owned, the veterans, etc. What is this other about socially and economically disadvantaged individuals? Is there a definition for that? Yes, there is. So the SBA is deciding to use the definition that they have for the 8A program. And I'm going to show it to you. It takes up the whole page, but you're going to see it again, etc. So that's the definition. So about halfway down, you'll see that it says, you know, on that where it says socially disadvantaged individuals are those that have been subjected to racial or ethnic prejudice or cultural bias because of their identity as a group as a member of a group without regard to their individual qualities. Individuals who are members of the following groups are presumably to be socially disadvantaged, and it lists quite a few there. And then it goes on to say economically disadvantaged individuals are those socially disadvantaged individuals whose ability to compete in the free enterprise system has been impaired due to diminished capital and credit opportunities compared to others in the same business area who are not socially disadvantaged. And it goes on for some other information. Again, this info, you'll be all in the slides, etc. So what is important about this is you'll also see in the application, it'll require a self-certification that the individuals have been subjected to racial or ethnic prejudice or cultural bias because of their identity. So that's kind of what you're going to see, this self-certification that will be required from the applicants. Also, if you're wondering, etc., I can't remember if Larry mentioned this or not, but remember this, as far as being qualified for any of the priority groups, whether it be women-owned or veteran-owned or this category here, the business has to be at least 51% owned by qualified individuals that fit that. So for example, if you have a five owners and one of them has a 20% veteran, is a veteran, which would be 20%, one of five, they would not qualify for this priority period. However, if 3 of the 5 were veteran or 3 of the 5 were women owned or whatever, they would. So it's going to be based on that 51% has to play. Okay, so let me go to my last slide here. This is SBA form 3172. This is not final. What is this? Well, when a government entity has to do forms and other things, they have to send it to OMB, the Office of Management and Budget. And when they do, they have to submit all of this. Well, this is what was submitted to OMB. So this is the Restaurant Revitalization Fund application as it currently stands. I know it says final here as of April 2nd, but everything is subject to change in parts of this as they get more comments. Once the guide comes out, etc., there'll probably be some changes to this form. But let me just show you a couple things how this is going to work. You see, this is what you'd actually see when you go into the portal. So there's some information up front. It's telling you about the 5 million, the 10 million. There's where it starts talking about the minimum of the award is 1,000. And if it's less than 1,000, the application wouldn't be accepted. It also talks about right there, you see funds not used by March 11th, 2023. So in the report going forward, not in the act, which allowed the SBA to do it, but when they went forward OMB, they are showing the 2-year extension right there. So you put the business name, you see the address, tax ID number, that kind of stuff. You see your banking account because the money will be directly, if the grant is awarded, it'll go directly to that checking or savings account, however you have it. Then there's the owner listing. You put in the owners. If it's just a single owner, it's 100%. And if there's multiple owners, etc. You'll notice in the form of application what it lists there. What you don't see is nonprofits. And our understanding currently, the SBA says that, not like the act says about government entities can't apply, but nonprofits, currently the SBA is believing that nonprofits would also not apply. I realize that others such as the Restaurant Association are still trying to work with the SBA to see if they're going to change any of that, but that's the current thought pattern, is that a nonprofit would not. We'll see how that turns out when they pull the official guidance. And again, what I'm showing you is not official. This is what they submitted, but this is a good, probably it's going to be a very close to what you're going to see once you get into the application. So now it's going to talk about, is it a state? You can see 1A, is it a state or locally government operation? If it's yes, you're not eligible. And it's talking, and just walk right through. You got more than 20 locations? If yes, you're not eligible. If you have a pending application or received a shutter, you're not eligible. So it's walking you through this in a very logical way. Are you publicly traded? If so, you're not eligible. What what describes you? And it says check all that apply. And you'll notice again that the 33% of gross receipts does not apply to these first that are listing, only to these. But here's this new snack and non-alcoholic beverage bar. Kind of an interesting little, hadn't seen those words before this came out. So then you can see here, is it permanently closed, etc. Bankruptcy, obviously tells you whether, etc. Now, we already see that there's questions, and Larry covered this very clearly, I think. But did the applicant receive a first draw? if you did at any time, doesn't matter whether it was last year, this year, whatever, anytime you received a PPP, you're going to have to put how much, the loan number, etc. However, if in fact you got a PPP and you decided to return it, to repay it on or before that safe harbor, then you do not have to include it. Did you get a second draw in 2021? If so, you got to put that information. Do you have affiliates? And it gets into that. How do you calculate the amount? Well, it's exactly what Larry said, that algebraic equation. You enter what you have in here, you do the next, you just walk through, enter the dollar amounts. As it said, this is tried to be as simple as possible. You just follow the lines, etc. So there's 3 different tables here. Obviously that first one, this one is if you began, that began operations partially through. The other one is if you were all of 2019. And then the next one table is what if you began during this period? And that tells you again and again, you could open as early as, March 9th, whatever of this year, and still be able to do certain things. But if you, it says that have not opened yet, but as March have incurred eligible expenses. So all interesting pieces there, etc. So those are the 3 tables. What are you going to use the thongs for? Select all that apply. Doesn't ask you for, specifics or anything. It's just asking you, what do you think you're going to use them for? There's the priority piece. Talks about the 3 different groups, the self-certification that I mentioned. And then you initial the self-certification that you feel that you're qualified in one of those groups. You see then the documentation that's required. The IRS form 4506T. You see the other things that are listed here, etc. in the documents. I'm not going to go through them all. It's just showing whatever. And then again, it's getting in here for the 33% for those applicants that fill into those categories that were mentioned. And there's the one for the in. Then it talks more about the self-certification that was done above. And some understandings, agreements that, that you have. There's this, that, and the other. This here is, it says, by the way, you acknowledge that you confirm that is eligible for this funding, etc. And that folks such as the Inspector General, others could take a look at this and audit it or whatever after the fact. This part here, the applicant demographic, is optional. It says this data is collected for program reporting purposes. Disclosure is optional, have no bearing on the applicant's application decision. What this is for is mainly Congress is trying to figure out if the money is going to the right folks, if we are reaching the right kind of demographics that they're trying to attend this for. So by having this kind of information gives Congress more insight where they may put more money or less money in the future. So this is what this is basically for the SBA to be better informed, and then they can inform Congress how programs are working, etc. Then you notice that there's some information here about signing, dating it. You get into here, there's some other issues about completing the form. Talks about tax identification numbers, all this kind of stuff. So there's just a lot of different information here. Affiliated businesses, there's some information. And here's that same, what I showed you on that 3rd slide, a small business concern owned or controlled by a social. This is what they're using as that definition, which is the same one that I showed you. So when you're trying to figure out what is that, that's the SBA definition that they sent forward to OMB. So, and then the rest of this is just about the regular Paperwork Reduction Act. Now there's many other documents that they submitted, but they're all required that they have to submit. This is the main one. Hopefully that's helpful. Again, this is not the official, but this can be reviewed. It's public information, etc. And that should be it for me for the moment. I'm going to stop sharing and we'll turn it back to the host to see what we can do for questionings.
Yes, thank you. Thank you, Glenn. Larry is going to share his screens and I'm going to start reading the questions. Some of the questions have already been answered throughout the presentation. but we can just revisit them. And I'm going to open the first question up to Larry and Glenn. With respect to restaurant revenue being at least 33% of revenue for an inn, we are not only a restaurant and an inn, but also a retail, e-commerce, brick and mortar, and body product manufacturing. Does that 33% have to be out of our total sales or only our inn sales?
That is an excellent question. And I could tell you from the act, it talks about entities and what entities are doing. So it sounds to me like you have a number of different components to your business, a portion of it being an inn, and the act is silent on that. You know, my initial sort of gut level reaction would be, you're probably going to have to look at the total revenue for the entity itself, and then what portion of it would fit. But there is an SBA component to this. And Glenn, I don't know if you feel differently or what you think the SBA might say for something like that.
No, I think your answer is spot on. Obviously, as we continue to get guidance on this, that might help. But if those questions are remaining, once the guidance comes out, if those questions are remaining, there'll be portals, etc., to be able to ask that question directly. So if you don't see it that come out in the guidance, when it comes out, feel free to ask that question directly to the SBA in their portal or to an SBDC advisor, and we'll try to get that answer for you.
Thank you. Next question. Any insight on how the priorities work with community property law?
I need a little bit more detail on what they mean by community property law. Is it possible to have that attendee give us a little bit more detail?
Yeah, we'll go into another question and see if they give us more insight on that. Okay. Do you know if operational expenses are included, like those included in the PP loan? For example, costs for perishable foods.
I think there is some SBA additional guidance on that, but I will say the act did specifically mention perishable foods. So I believe that is an operational expense that can be included.
Concur.
Thank you. Does receipt of the Restaurant Revitalization Fund grant make the business ineligible to apply for future PPP loans?
There was nothing in the act on that, but it sounded to me like, Glenn, you believe the SBA had an opinion about that.
Yeah, so I think it's the answer is yes. No, you could not apply. Now that doesn't mean that Congress might change something. They may put more money into this later and allow some of that. They may be another, who knows, maybe another round of PPP. So I can't say that would never, but the initial guidance that we're receiving from the SBA says, no, you can't. Once you get this, you wouldn't get it because they would deduct the amount anyway. So what would be the purpose of it? If you have an amount that was given from you, it wouldn't make any sense because how would you deduct it after the fact? So that's the reason why no, unless there's new law, a new act, new money, new guidance from Congress, the answer would be no.
Thank you. So we do have a little extra for the insight on how the priorities work with community property law. They're thinking of the ownership interest. K1 goes to the husband, but under NM law, the ownership interest is community property. Does the wife count as an owner for purposes of being women owned for the priority?
That is a fairly sophisticated question that is going to be a little hard for me to give you a quick answer, and I'm sorry. But it sounds to me like what you are trying to say is you're trying to rely on ownership associated with community property law. And usually that you find that happening when there's a dispute on ownership, a question about the marital estate or property. And so then community property comes into the fold. Are you using community property law to define ownership with taxes? If you are doing that, then I'm going to say fine. Apply the ownership that you are assuming when you're filing taxes. I don't think you're going to be able to just pull a rabbit out of the hat saying, oh, well, I've been married forever, community property law, so woman-owned business. And if that varies from what is showing up on your tax forms, for example, you might have some issues. But there's a lot of nuance to what I'm telling you here. So I would strongly encourage you to talk to an appropriate attorney or CPA to help you understand the issues around that.
Thank you.
The only
We
thing I
had-
would, the only thing I would point out there is that in that initial guidance, if we're looking at a husband and wife and the fact that it has to be 51% owned, if it's a 50-50, then they're not going to make the 51%. But I think Larry's guidance is to seek other advice is probably well suited for that question.
Thank you too. We have 8 separate legal entities, each under the same restaurant name. All are under common ownership. Should we file one application including all 8 or 8 individual applications?
Well, my interpretation of the statute is they're all going to be considered an affiliated entity here because of the common ownership. And so it sounds to me like one application, multiple locations is what my knee-jerk reaction is, but I'm gonna punt on that one as well. I'm sure Glenn's gonna have more to say about it, but you really should talk to a professional about that. But that's my knee-jerk reaction.
I believe that what Larry said is the intent of Congress, and we would expect that to be also the case from the SBA. But I'm sure that when they come out with the guide, I would almost be positive that they will in fact mention that, et cetera, be more explicit. But I think Larry's answer is correct, that it would be one application. That would be my quick take, just like Larry said.
We have a question. Fast food with a drive-through, would that be considered to apply?
I can tell you what I have heard in an unofficial capacity. And so don't take this as gospel. Let's wait for the guide, that fast food restaurants will not be eligible. But I've heard, that's unofficial. Don't know the whatever. So let's wait for that guide to come out. Should be out within, a few more days. And let's see what the SBA has to say. But that's what I've heard. Don't know if that's going to be the case or not. And Larry, do you have anything else you might want to add on that one?
Well, that's interesting, isn't it? The Act specifically mentions on-premise consumption. So the fact that it makes, if it's just solely a drive-through where there's no on-premise consumption, then I think I agree with Glenn. If there is on-site consumption, however, there's the drive-through, but you have the walk-in where you can sit down and eat. I wonder about that. I wonder where SBA is going to come out in that. I think they'd have a hard time arguing that such a fast food place would not apply when the Act specifically says on-site consumption.
That's why I'm saying I think we got to wait to the guidance, because we've heard some of that unofficially, and I'm having the same struggles that Larry just had with that. So that's why I'm just telling you what we've heard. That doesn't mean it's going to be the fact.
Thank you. When calculating gross income, will that include PPP, EIDL monies, and other pandemic resources?
No. Although we need SBA guidance on some of that, but my understanding is no.
So idle advances, state and local, are not included. Obviously, the application, as you saw, you have to put in PPP, but the other ones, those are not included.
Thank you. Do the 2020 taxes have to be filed before you can apply for this grant?
There's no requirement to have the taxes done that I'm aware of. SBA may have some other guidance coming out on that, but I'll say that it will make your job a little harder to prove gross receipts. You're going to have to still do that. But my understanding is there's not a firm requirement that would make you ineligible if your 2020 taxes weren't completed.
Obviously, if it opens before taxes, the mandatory taxing, they couldn't, since filing has been extended until, instead of today, instead of it, it's now, May 17th. So I don't think they would be able to do that, but I would imagine that in the application, I went through some of that kind of quickly on that form that talked about the tax records. It probably already says that, but I'm sure it's going to come out in the guide. And if not, again, just contact an SBDC or look at the SBA website, or we can ask the question. But I'm sure there's going to be specific guidance on that.
Thank you. Is the grant money taxable?
There was if I'm remembering correctly, there was a specific provision in Congress, or the act, excuse me, that specifically making it non-taxable and trying to prevent it. And also the IRS, it's a bigger story here, but the IRS was on PPP loans, for example, was saying, okay, well, the PPP is not taxable, but the expenses that were paid by the PPP, you can't deduct them. So essentially, and running around what Congress was trying to do. So Congress actually went one step further and prevented that. At least what I saw in the act. I don't know if the SBA is going to say something about it, but I can't imagine they would.
So the answer is no, and we don't know. So why would I give both? Federally, it's not taxable. States can do whatever they want. Now, so if a state does have taxes, they could decide they want to. That's a state issue, but federally, no. Most states have gone and said they're not going to tax, for example, things like PPP and whatever, but there are a few states that are right now have those as taxable. So federal, no. State, New Mexico is not. New Mexico hasn't taxed any of these. I wouldn't expect them to, knowing how hard our restaurant industry has been hit, and those that are affiliated or other eligible. I can't imagine New Mexico taxing this. That is not likely to happen.
That's a good point, Don.
Thank you. Can a controller go in and enter all the information and submit the application, or does the actual owner have to sign it?
The application that Glenn showed us was a Word document. I would assume that you can use your agents or professionals to help you. And then the owner, if they have an authorized agent, I'm sure can execute that. Unless, Glenn, you have some better ideas of what the SBA is going to require there.
I'm just thinking that somebody could fill it out, but when you're talking about things like initials, somebody self-certifying that they're in that, I think that would have to be done by the act. They would have to be the actual initials of the owner, because they are self-certifying on that if they're a socially disadvantaged. As far as the actual signature, I think the signature probably be the owner, but I can't answer that for sure, but I would definitely think on the self-certification, that would have to be the individual that believes they were part of that. I don't think somebody else can self-certify that part of it.
Thank you. We had a couple questions on this. Can ongoing future mortgage payments over the eligible period be included, or only mortgage payments that have already been paid?
It's the expenses incurred during the covered period. So it's going to, the covered period, as you remember, was with like March 11th or 13th of 2020. And the statute had until December 2021 and has already been extended by the SBA. So that will be ongoing mortgage principal and interest payments ongoing, not prepayments, but payments.
So for example, in March 10th of next year, you couldn't prepay, but you could pay anything that has been accumulated up through March 11th of whatever 2023. But you couldn't do it for things that are beyond that date.
Thank you. I believe this goes back to one of the slides. My business opened 12/28/19. How would my eligible grant amount be calculated?
It's the same formula. You know, so it's, but remember, it's the average for the month. And I would expect the SBA is going to come out with further guidance on partial months. But in theory, it'd be whatever revenue you generated in December 2019, then times 12. And then you deduct the same formula for 2020. The average monthly times 12 in 2020. So that might, you know, it's interesting there because if it's so late in December, I assume you don't have a heck of a lot of revenue in December. And I wonder if the SBA will allow you to impute it or do a daily average. But right now, that's not what's in the statute, and that's not what I've seen with the SBA.
Thank you. I think this is another one of those questions. What bank statements are we anticipating needing to submit, 2019 or 2020, or both for all accounts, including the PPP account?
I believe you're going to need to share all relevant documentation to prove your revenue and or expenses if that applies to you. So if you have multiple accounts, it would be all your bank records.
I believe we've also answered this. Can you mix and match for priority purposes for answering, for example, 31% women owned, 20% veteran owned? I believe you did answer that, Larry, correct?
No, I don't know if we did or not, but I don't believe you can do that. That, you know, you'd have to be able to meet a certain category. So you're veteran owned and you have to meet the veteran owned requirements. If you're woman owned, the woman owned requirements. You can't mix and match like that, unfortunately.
Here is another one. I guess it's maybe along the same lines. The first 21 days is reserved for women owned, minority owned, etc. Even if you're not part of this 21-day group, can you still apply in advance of the 21-day expiration to be first in line when it opens for all other applicants?
I believe the answer is yes. I have not seen what the if the SBA has put any further requirements on that, but the way the statute reads, the SBA is supposed to maintain priority for these groups for the first 21 days. So I don't see why that would stop somebody from submitting the application earlier.
Thank you. I have a business with 2 locations. One has been open since 2014 and one location just opened in June of 2020. Same EIN. Because we have had a half of year with a second location, It looks like we made money, but our sales from our primary location were down about 35%. Is there anything we can do?
You're really going to need to talk to a CPA or accountant to help you understand or lay out those numbers. But I mean, at the end of the day, you're in a single entity with 2 locations, and granted, your revenue probably changed quite a bit, as well as your expenses relating to the opening of the second location. But in general, I think you're going to have to talk to a CPA or accountant to figure out, to lay that out and figure out what how those numbers might look. But I don't have any really great advice or good advice for you to tell you how you can take advantage of that based on what I'm hearing. I'm sorry.
Let's see, 2 restaurants I want to apply for are owned 100% by a non-eligible entity, not a restaurant. They are part of a consolidated tax return that does not list their income specifically. Would that be accepted by the SBA? And will the SBA accept their financial statements, point of sale reports, bank statements as a gross receipts documentation?
So a lot there. So let's deal with the first issue. If I understood the question correctly, you have another company owning a qualified entity so it's some sort of restaurant or business, and it happens to be owned by another entity of some sort that's not qualified, meaning not a restaurant. I don't see any issues with that really at all. So what that would mean is you would focus on the entity that is qualified. It sounds like there are no affiliated entities here. The affiliated entity, as part of that definition in statute, is one that would be qualified potentially for grant money. So I would just focus on your individual entity. You don't care about the revenues of the owner. You care about the revenues of the qualified entity, the restaurant. And so whatever you're going to use to prove that, and if taxes are just rolled up to the parent or owner, then you're going to have to fall back on other information, the point of sale reports and so on. So in theory, that should be acceptable.
Okay, so this kind of goes along the same line. Should we submit multiple sources of gross receipts or focus on the one?
Well, what we care about is the total gross receipts of the entity. So I'm not quite sure I understand what additional sources means, but what you care about is the total revenue of the business. And so whatever you're going to need to prove and show that is going to be necessary for this.
A question came in via email. As a private country club, our restaurant is a department and not freestanding, but the restaurant department suffered greatly over the past 12 months. Would we be eligible to apply?
I think we're going to have to wait for further guidance from the SBA on some of these edge cases like this. Interpreted literally, I brought up the grocery store example where I felt pretty confident that was not Congress's intent with the grant money. But a grocery store might have a little, side restaurant or cafe in the otherwise larger enterprise or business. I think the private country club is going to have a similar issue or analysis. What Congress seems to care about is the entity itself. You look at the entity and say, is this a restaurant or not? And in this particular example, it's not a restaurant. It's a private country club that happens to have a small little restaurant as part of the overall business. And so I think then you'd have to look at, well, what is the general size or revenue of that business in comparison to the entire enterprise. And if you get over the 33% threshold, I think you might have an argument. I don't want to say for sure because the SBA was pretty specific on the business types, as you saw in the application that Glenn showed you, but I think you might be able to make an argument. And I think we're going to have to wait for further SBA guidance on that. So I'm sorry, I can't give you a yes or no answer here.
And we just have a couple of questions left. Again, this is a technical question. It says that the application form 3172 includes the required form 4506T, which is the request for transcript. Can they submit that digitally, or do they have to provide the actual transcript? May have to wait on that one too for guidance.
You know, it's been my experience. Yeah, I think we're gonna have to wait on guidance on that. I've seen with the PPP submissions that they've been able to take either way, but it's been the banks doing the underwriting and reviewing those documents. So with the SBA, I really don't know, unless Glenn, it looks like you're back. Maybe you might have an answer for that.
No, I think it's the same as what you said. I think we just have to wait to see. I would think things like that are going to be answered in some sort of a user's guide or frequently asked questions or whatever they come out with. I would think that those would be included.
Another question back to the ownership, the early period. Ownership 50-50 by a woman and a Hispanic American man not quite qualify for early period. I think we have addressed that question.
Yeah, and I think that I still think that things like this idea is going to come up because of the cross between those three. What if you have this and this? That I think that those will be answered in the whatever. But if not, send it forward. We'll be happy to get an answer.
Last question is about the PP loans and the SBA money not quite related to the Restaurant Revitalization Fund. We do want to tell everyone that we do send all the slides and a follow-up email with more resources. We want to direct everyone to nmsbdc.org for our no-cost confidential business counseling. I'll be glad to connect you with your local center to get any information that you might need. I think we are wrapped up for today, and I do not see any more questions. You have any last comments before we pop off?
I don't.
I don't know
Yeah,
about
please,
Larry.
Glenn, please.
Yeah, I do have just two quick things. One is on the one of the slides that I had somebody mentioned about the @ sign, you know, the restaurants at whatever. It is a dot, not an at. So need to change that on that slide before you send that out. But again, that's what we believe the address is going to be. But we don't know 100% sure until they actually list it. But so on that one slide, if you could change that dot to instead of the at.
Absolutely.
But I thank everybody that's there. I noticed earlier, and I don't know if she's still there, but Carol from the New Mexico Restaurant Association was on the call. I was just wondering if she's still on, if she has any quick words, if we might be able to unmute her if Carol's still there.
Let me check for you.
I hate to put her on the spot, but she's so involved, you know, with everything. If she's available, I think it'd be great to.
We have a lot of attendees today.
Yeah.
I am looking. I do not see her.
Okay, she might have dropped off already. Yeah.
Yeah. So
That's all that I have.
Thank you. I'd like to thank everyone for today. And again, you'll be receiving a follow-up email, and we want you to check out nmsbdc.org for upcoming webinars and events. Thanks, everybody.
Thank you.